Good morning, everybody. It is Thursday, January 25th. I'm Jane Johnston with the Briar Hill Group at RE/MAX Most, and welcome to the Victoria Real Estate Show with...
Hey, everybody, it's Andrew Plank with LePage and the Vibe Real Estate Group. How are you?
How are you doing?
Yeah, good. Really good. Held my breath yesterday for 4 minutes.
Oh, really?
Really?
Wow.
Yeah. I mean, taking a free diving course, so we had some fun with that. Well, not fun with that. It's part of the course. So we were in the pool and doing all kinds of breathing exercises and stuff. Yeah. Anyway, good times and busy.
There's a fun guy to follow on Instagram for that who I think he's called the 10-minute guy or something. Anyway, they have some funny videos where people are going up and down in the pool. I'll send it to you.
Okay, please.
How is real estate going?
Good. Yeah, things are really starting to pick up. I'm noticing quite an uptick in calls and interest and showings, everything. So that's good. And of course, I was really glad to see that there was a positive announcement from the Bank of Canada, positive from a real estate perspective.
Right. So we'll be having Jen Lowe talking to us about that today, which is nice. I am in Las Vegas. I flew here last night. I'm here for the weekend for a business conference, so should be fun.
You look so excited. You just look so happy to be there.
It's not my comfort zone. I posted something like going from, a very moist environment in Metchosin and walking through the forest to the bright lights. And last night I woke up at 3:00 in the morning and I thought it was daytime.
Wow. Just because all the city lights.
Yeah, it's so weird.
They have this thing called blinds and you can put them down and up in your hotel room and it helps to darken the place.
I know. I was so excited though to see what was going on. Anyway, let's get to the stats. That's what people are here for. So let me just get the right format here. So it's January 25th, and we're today talking about Victoria real estate and the Bank of Canada update. We have Jen Lowe here, and I cannot get the right format. There we go. Alrighty. Sorry. So first of all, actually, if you learned anything today, or if anything's of interest maybe to one of your friends, please share us, and please don't forget to subscribe to us. We do depend on those subscriptions to keep our show going, and we'd love to hear your comments. If you want any information covered, please let us know. All right, go ahead.
I'm going ahead. I will go ahead with January 25th. We will look at the last week, and we've got 183 new listings in the last week, and we've got 129 properties went pending in the last week. So we've got a pretty substantial listing to pending ratio. You will remember in the fall we were seeing this purple line much shorter compared to the green. 43 properties did decrease in price. Not everything is selling. 3 price increases, 0 back on market, 61 properties transacted, 37 properties expired unsold. They were either undesirable or overpriced or something with that. 10 properties were withdrawn. Somebody changed their mind or something happened for them to take them off market. Compare this to, now this is a couple weeks before January 11th. So
actually it's January 18th. I just forgot.
It is January 18th. Okay, so use your imagination, and the second digit there is an 8, not a 1. So we've got January 18th. We had 219 properties go come on market. 111 went pending. 51 increased in price. 51 price decreases. 0 price increases. 4 back on market. 104 sold. 44 expired, and 5 withdrawn. You can see that purple line, the difference between those two, even then.
Yeah, I'm just surprised a bit that the new listings are down from last week, which it's interesting to me. But I guess, like for me, I was waiting for the Bank of Canada announcement before we put up some listings. So just seeing.
Yeah, we might see a big boost.
I
Might
don't
have been some
remember.
people on hold on that.
I don't remember being so in tune with the announcement as we are right now. Seems to me there's more awareness.
I don't think it was as crucial or critical to a buying or selling. You know, it obviously affects price, but it wasn't changing as rapidly. It wasn't as much in the news, and it wasn't as, you know, rates haven't been this high for quite some time. So
Okay.
every little bit counts.
All right.
You're right.
So I can barely read this. We're at, I think 200, is that 278 net unconditional sales? That's compared to 181. Sorry, we're at 181 for January of 2024. That's compared to 278 for January 2023. New listings are at 604. That's compared to 805. 640, sorry. And total active listings is 2108. That's compared to 1739. I'm doing the trombone here. I'm so tired. Okay.
Okay. Yeah. Let me give you this.
But that's interesting to me. We're down year over year. So I think
For
people
active
are holding their breath.
listings. Yeah. Yeah. Active listings are down. When you look at this net unconditional sales at 181, we are only at January 25th. So that's compared to a full year in January 2023, but
A full month.
Yeah, that's true. A full month. Thank you. We're going to
Yeah,
just correct each other all through this. So,
that's okay. So it just, I think a lot of people were waiting and seeing because I think maybe there's, I don't know, more savviness around what's happening with the rate and how that potentially affects prices based on what's happened over the past few years.
So watch for this next week and the coming weeks. Suspect that we'll see a bump if people have been holding off. I do think that I've been encouraging people to get ahead of the spring in terms of buying. In terms of selling, I think it's probably not going to harm you to wait. I think that we'll see probably increase in buyer activity and therefore increase in potentially values. But from a buying perspective, I think it's a good idea to be getting ahead of the game.
Yeah.
Based on what we're seeing, what do you think, Jane?
I agree. We definitely have people out there looking. We find it's an interesting time because there are a lot of people who I see on my matrix kind of went off the search mode for December because they were distracted with other things happening with family. And well, I get that. And we did have consistent sales for our team in December. So we were encouraging people to write offers when the market was slower. And I think right now everyone has just been holding their breath, waiting. And I do think based on talk in the office, it looks like we're going to have more listings coming up. So I do think we'll have a bump. Hopefully that'll mean a big market for sellers, but hopefully there won't be a glut.
Mm-hmm. Mm-hmm.
So
yeah.
Anyway.
Yeah,
All right.
If there's been a lot of people holding on listing their homes and waiting to list their homes for prices to come back, for demand to come back, then once that is perceived to be there and a whole bunch of properties dump on the market, then we will again, we'll flutter. The plane will stall.
Yeah. So we may see a bump in listings, but we may see prices actually come down if there's a lot of listings, I'm thinking. If there aren't a lot of listings and if things remain kind of balanced and we see a hold on rates, then I'm perceiving that we'll have a run on the market, a good run.
Yeah. Yeah. I think that I know we want to move on, but a lot of people do want to sell and buy. And I find that people timing the market, it's that jump between the two properties that makes it hard for them. And so people are waiting for the right moment. And so I find that we don't see the same dumping of properties coming on market anymore, where they're just like, well, let's just sell because we can buy something. you need to find enough inventory to buy before you decide to sell. And that seems to be sort of self-fulfilling, and it has been for a number of years, or it keeps the inventory low.
Yeah, agreed. Okay, let's bring Jen Lowe on. She's with the Modern Mortgage Group. Hello, Jen.
Good morning. How are you guys?
How are you? Good. How are you?
Jen,
Good.
I saw you multitasking there.
I was making a couple notes, actually.
Good.
So we have this. I found this graph on a Bank of Canada site. So the solid lines are the interest rates announcement, and inflation is the red line. So we can see after COVID, well, we were very steady pre-COVID. We had a flat line there for inflation, and then during COVID, we had negative inflation rate, and then they dumped a lot of money into the economy, and that caused a lot of people to spend, and we went crazy. And then that's when the interest rates started going up. We had like 7 or 8 increases over time, and then we're seeing they're trying to bring it down. So the goal is 2%, which is, I'm told, a made-up goal, and that's fine.
2 and 3%. Yeah.
2 and 3%. Yeah. So I'm just wondering, part of that inflation is based on the price of housing, the cost of mortgages and rents and all of that. So it is sort of like an oxymoron. Yeah.
It's the biggest contributor to inflation is housing costs or your shelter costs.
Mm-hmm. So the higher the interest rates for those people who are on interest, it cycles itself back up. Yeah.
So they need to drop rates.
Okay.
So what are you?
That was great.
What are the banks saying?
Sorry, go ahead.
Guys, come on. What is the bank saying? What are they saying in terms of the interest rates and stuff, like mortgage lending, and what's happening?
Basically, I mean, with the announcement yesterday, our Dominion Lending has a chief economist, Dr. Sherry Cooper, and I enjoyed a great presentation from her yesterday. Her take on it, yes, their Bank of Canada is hinting that they're easing, and they're definitely not going to be raising rates. And the timing of when rates start coming down, they're suggesting June, but there's definitely a bit of debate that the Bank of Canada may be forced to reduce rates prior to June.
Forced by who?
Not because of the overall economy and all the measures that come up with how they determine what the overnight lending rate's going to be, whether they're going to keep it at 5% or reduce it.
Right. So they've been course correcting for some time, and if they feel like they're going to be aiming toward the rocks soon, they've got to, closer they're getting to those rocks, they've got to make an adjustment much more forcibly.
The other challenge too is the amount of immigration we have in Canada, and the reduction in housing starts. It's so expensive to build homes that there's one new housing start for every 5 new Canadians, I believe was the stat we were given yesterday, and that's a huge problem.
Right.
Wow. So, well, I mean, that's a problem. So what they're trying to do is limit immigration over the next 2 years, after last year saying that they were increasing it. So this is funny to me, but
we're welcoming the immigrant. We're welcoming, that, but they're not. How do we house them?
Mm-hmm.
Well, there's a ban on foreign students over the next 2 years. Did you guys read about that? So that's going to really lower the the immigration, and so it's going to affect local economies too, because these schools, mostly smaller schools, bringing kids, apparently the education's not that great, but they're looking, I guess, to influence these young kids and get them speaking English, and they're going to impact the immigration that way. That was, I guess, decided on Monday or something like that. I mean, I understand that. And then we have the foreign buyer ban still happening. And then we have the US election, which may push people this way too. Like, I don't know.
I think this is a topic for another day, but I think that when, you do bring up the cost of building a house, I wonder how much this has to do with, as time moves on, we've got more stringent building codes and of course and some more complicated materials in building a home, and more specialized requirements on getting specialized tradespeople in. I mean, if you were to build a home in the 60s, maybe it was a little simpler. And of course, there was also access to more timber and so forth. So, I mean, there's a lot of factors, but it's interesting that it's the cost of building, and you could say it's the cost of land too, but we have a lot of land in Canada. It's not like, I mean, if you want to be in Victoria or Vancouver, Toronto, Calgary, those areas are really expensive, but you can go to outlying areas and find land really cheap. We can accommodate people, but we need to find roofs for them.
Yeah. And further to that, once interest rates do start decreasing, normally what happens is house prices start going up, like good old supply and demand. Added to that, 60% of all Canadian mortgages are up for renewal in the next 3 years.
That's a huge number. Yeah. So there's a big lump of mortgages coming due within a 3-year span. What's the average of coming due in a 3-year span? I guess it'd be more like 30%.
That's a good question. That I don't know.
Okay.
I would say, I mean, when we go back 3 years, I mean, the market was pretty crazy. Interest rates were lower. Lots of people got in. I mean, it's interesting to compare. There's always so much comparison, the Canadian versus the US. The US are much better off than we are here on, if you own a home, your interest rate is guaranteed for 30 years. And you do not have to, or you're able to write off the mortgage interest. And I learned yesterday, apparently, your property taxes are also a tax write-off.
Interesting.
Yeah.
Your taxes are a tax write-off. That's crazy.
Yeah.
Wow. Usually I'm concerned about taxes on taxes. Now
I knew the mortgage interest across the board, primary home versus rental, it doesn't matter. And the fact that they have that guaranteed rate for 30 years, whereas in Canada here, your mortgage is coming up for renewal. Usually people go with a 5-year term. So every 5 years.
One of the issues though with the US right now is the fact there's lack of inventory, because nobody wants to sell because they have such great interest rates. So everyone is building up equity. You're going to have a huge case of have and have nots there.
That'll be interesting to see too. Yeah. You don't have the same affordability issues in the US that we do here, because people's housing cost, your main expense is your shelter. That has gone up so much.
In Canada.
In Canada, yeah.
And as you said, with interest rates going down, housing prices go up. That's actually impetus for builders to start building again. Like the Bank of Canada wants to keep the economy from stalling or whatever they're trying to do. But higher prices is not necessarily a bad thing if it's developers aren't going to build for a loss. So they're only going to build something if they can get more money for it, then it's going to cost them.
Yeah. Across Canada, another stat that I wrote from our meeting yesterday was the cost of construction has increased 51% since COVID.
Yeah. So there's not a lot of, there's too much skin in the game right now. There's not a lot of profit available to builders. Plus, my understanding is the process, the development process at the municipalities is a bit onerous as well. So they're looking to streamline that, and that's one of the reasons why they're changing all the plans. Official community plans and zoning should be reflective of one another.
Mm-hmm. Yeah, I mean, I think.
Me,
go ahead. Sorry, Jane.
To me, it's going to be a real year of change.
Yeah,
it feels like there's going to be a big shift.
Yeah.
So, Jen, with 60% of mortgages coming up in the next 3 years, what do you anticipate? I mean, outside of the Bank of Canada, what do you anticipate actual lenders doing, and the impact on lenders as a result of that? Because how will they respond to that? Are they going to change are they going to charge more because they know they can, or how does this impact the consumer outside of Bank of Canada?
When your mortgage is up for renewal, you've got two options. You can either sign on the dotted line with your lender. Usually what they're offering is a rate slightly higher than what you could get at another bank. So definitely recommend reaching out to a mortgage broker to look at, okay, what, is this rate great? If not, let's see what other options there are for you. And it's no cost to transfer your mortgage to another lender. From a qualifying standpoint, we do have to get income verification for the most part, but there's definitely rumblings. If your mortgage is existing and you're not asking for any new money, transferring from one lender to another, there is limited qualification requirements. So they're
going to be more competitive.
Yes. So they're making it so that you're not stuck to your bank.
Okay. So they're looking to shuffle more money around in terms of their own, like the little more fluidity and people being able to move between lenders.
Yes. To avoid that, banks are going to just charge a higher rate because they know you can't move.
Oh, okay. So if you can move, you might get a better deal, or more attractive. But if you can't move because you don't qualify anymore, you're stuck at a higher rate.
Yeah. So basically, don't assume that, you just changed jobs or you're recently retired, I won't qualify, I just have to sign one with my bank. No, don't assume that. It's always worth reaching out to your mortgage broker and taking a look at it to see what your best options are.
I almost wonder, because we have this joke about don't buy a new car just before closing. The same would go on renewal, right?
Yeah.
So that's probably something to reach out to clientele, a year before their renewal. Say, like, look, if you're on the edge for being getting an approval, or even if not, don't. You're probably better off being able to switch horses, switch banks. So make sure that you're still in a position where you qualify.
Mm-hmm. And depending on the bank, we can look at it really honestly like 6 months prior to the maturity date. You don't want to, if your rate 90% chance, I would say, is lower than what your new rate is going to be. However, we can start looking at it and get a rate secured for your maturity date.
Right.
Do you find a lot of people also start to requalify themselves before they decide to move homes? I mean, this is a step we always recommend at the Briar Hill Group, that people talk to the lender and the mortgage broker and just see what their potential is, basically, like if they're requalifying to purchase a home. So when they're moving, even if they're, and I always recommend getting a line of credit. Do you recommend that as well?
Yes, that it gives you that flexibility for your deposit, etc. As well, it's always important to explore the portability options with your existing mortgage. Can you port your mortgage to the new property? Is it worth it? Depending on how much time you have left on your mortgage. And the fine print with porting varies by every lender.
Now, the point where you can pay off without penalty is there a point in your mortgage, like 6 months, a year before, where you can pay off without penalty? Is that not right?
No,
No.
not usually, but
Okay. The penalty gets smaller over time as you
yes,
get closer to the renewal.
there's a Red Bank, Scotiabank, that up to 30 days prior to your maturity date, they just charge the interest to the maturity date. Versus some lenders, if you pay it out the day before your maturity date, you are looking at a full 3-month interest penalty or interest rate differential penalty. So all those
Exactly.
pieces are so important.
Okay.
This is exactly why you want to make sure you're dovetailing your dates on your sale with the purchase.
Yeah.
So, are you finding right now, like, have they got their ducks in a row, or what kind of conversations are you having with people who are looking to, like, either be first-time buyers or who are selling and buying? Are they qualifying themselves now? Are people savvy?
I would say most definitely I've got a lot of pre-approvals with people just kind of waiting to see what's going to happen with rates. But I've got rate holds in place for them. And then I've had a number of renewals that people are planning to sell their current rental property they have, et cetera, due to the new Airbnb rules, et cetera. So definitely, I think it's going to be a great year from a real estate standpoint. A lot of listings anyways.
That's good to hear.
Are you finding?
Thank you, Jen.
Are you finding? Well, actually, if you could take a moment and tell us, what do you expect the variable rate to do this year, and what do you expect the fixed rate to do this year?
I think right now fixed rates, if we looking at the next sort of 4 to 6 months, fixed rates are going to be stalled until variable rates drop. Variable rates start coming down. I'm hopeful for April based on all the other stats that make up like what's happening in the labor market, unemployment, et cetera. If interest rates start coming down in April, we expect or even June, it to be a 1/4 percentage point and then another 1/4 percentage point. So hopefully by the end of the year, we're going to see 1 to 1.5% rate reduction. So it's definitely, in looking at, it's opened up lots of people exploring variable rate mortgages again to take advantage of those future rate drops.
Okay,
And so you
let's
mentioned
say,
you mentioned that people are coming in at they're coming up for their renewals and they're considering selling. So they're looking at, they're doing open mortgages then? Like
Yes.
these people, yeah. So you're seeing a lot more open mortgages. So they can be flexible. That's a good indication that we will be busy for sure.
Mm-hmm.
So let's just expand on that question that Andrew asked. So I'm using myself as an example. We know we have a mortgage renewal coming up in November. So one of the questions I actually have is, do banks kind of have sales quota that they like to meet? And, let's offer a deal now to get more mortgages. Or do they have something like, this is the way the policy is, it's going to be rigid for the next year or so?
Interesting question. So I can go back to when I was in the banking world, and I can tell you that everything, absolutely, everything is measured.
Yeah,
absolutely everything. So they're measuring the amount of mortgages coming, going, new credit cards, absolutely everything on an individual branch level, and then in BC, et cetera, and you're constantly compared to other provinces. When I was in the banking world, what does fluctuate is based on the amount of volume banks put in different categories. So if they're doing a lot right now, let's just say they're doing a lot of conventional mortgages, meaning someone has more than a 20% down payment. There's certain buckets that the mortgages go into. And when your mortgage is up for renewal, if that bucket is relatively full, you're not going to get an aggressive interest rate offer for renewal. Whereas if that bucket isn't full, you may get an incredible rate. Because every once in a while you hear of people that they say, well, not every once in a while, all the time, you know, oh, I got this great rate with, you know, whichever bank, the green bank.
Mm-hmm.
And it's like, wow, that's an incredible rate. Well, what was the parameters around it? Okay, well, they must be really looking for, or, you know, looking to fill that bucket.
Oh, gotcha.
Interesting. Yeah. Do you find what's going on with CMHC out there? Is there anything on the horizon in terms of any changes with them that you're seeing, or their lending practices? Or
CMHC,
I know they also
they've
also
got a
have
couple
like
programs that are available for first-time home buyers, you know, converting your home to more energy efficient, etc. But nothing new that I'm aware of anyways.
Okay.
Yeah.
Fair enough. Yeah. You'd think that because that's sort of more government run, they think they'd be moving some things forward if they could. But I know they have a quota around how much they can lend, and I think that they kind of were reaching a ceiling at one point, and then I think they expanded it.
Yes, they were. So they restricted their qualifying ratios for individuals that no more than 42% of your gross income could go towards all of your monthly debts. But there is two other default mortgage insurers. So basically it reduced the market for CMHC, but increased the market for Sagen and Canada Guarantee, which are the two other insurers.
Got it. Okay. Thank you.
So what's your prediction this year for your own business?
I am hoping that it starts increasing once interest rates start coming down. I'm looking forward to an increase in business. I've definitely slowed down right now, as lots of people are just waiting. So I expect to be a similar year that I had last year, but definitely a big pickup towards the latter part of the year is what I suspect.
What's your prediction, Andrew, for this coming year?
Well, I mean, again, if things go as Jen is mentioning, that, you know, we're going to see some interest rate drops. I think we're already seeing more positivity in the market as people are kind of feeling like the pressure of the threat of the hammer in front of us with the higher interest rates coming up every few months being, you know, much less likely. It's now looking like it's going to be dropping. I think people will be much more likely to be buying and going out for their mortgage, and for that means we will see a really busy spring. We may see a busier than normal summer. If we see some good drops in the fall, which is probably the most likely spot where we see the bigger drops, then that would also, I mean, I'm sure they're waiting to see what happens with this spring, the Bank of Canada, before making some decisions around the fall. But I think we'll have a fairly steady, busy year, and I do think prices are going to come up.
I think we're going to have a run on the market. I think people are going to wait maybe a little bit just to see what's happening with interest rates. I'm interested to see what the banks decide to do with variable versus fixed. And obviously, I think the choice right now is to choose variable and then perhaps lock into fixed a little later on in the year. What would your opinion be on that, Jen?
Yes. Yeah. Going variable. I mean, unfortunately, myself, speaking from my own personal experience, I would have loved to have locked in my own variable rate before all the increases, but I didn't. So now I'm really looking forward to these rate decreases.
It's good to know, Jen, that you're in the same boat.
Yes.
Darn it, why didn't we catch this? But you know, that being said, you know, a lot back in the day, people would be, and I'm assuming your business in this is much lower now, is where people actually break their mortgage and to get a lower mortgage. But that obviously isn't, there's no desire, there's no reason to be doing that for the last little while.
Yeah.
So that segment of your business is probably completely dried up. That's going to start, we might start seeing that again in the next couple of years. What do you, at what point would you say that that's sort of a trigger point that makes sense to do?
Once rates start coming down, for sure, people will start wanting to refinance, pay off those credit cards or, you know, high interest loans. Whereas, this past year, there was not. That refinance piece of my business was very limited. You know, so I'm looking forward to an increase in that side as well, and helping people, helping people out, getting rid of their high interest debts, increasing their cash flow, you know, with their utilizing the equity in their home.
Absolutely.
It would be great to have a U.S. mortgage broker or lender on one of these calls and just look at the difference between the lending rules and how people are coping in Canada and the U.S.
I would love that. That would be a lot of fun.
Get dueling brokers, Jen and someone from the States, and yeah,
just to see, because I think you know, we were running in a parallel universe during COVID, but then now that our interest rates have gone up so high, and people aren't tied into 30-year mortgages like they are in the US, there's just been a big divergence in both real estate as a whole and in the mortgage brokering world, I think.
The one thing I do know, and because I've been talking to my cousin who lives in Long Island, I picked her brain a little bit when I last visited her, is property taxes are much higher in the States as a whole than they are here. Yes.
Right. But I spoke to a US realtor about that. And so property taxes are related to where you live, right? And if you live in a nice area with lots of amenities, you're going to have higher property taxes. But in they have less taxes, income taxes. So this is why there's have and have not areas, is because if the perception is your property is worth more, then you're going to be paying more taxes. And that goes towards things like local hospitals and stuff like that. We pay it all federally.
Interesting.
Yeah. It was eye-opening to me to realize, yes, everybody talks about income taxes, but they don't realize that property taxes are way higher there. Yeah. Okay, so thank you very much for coming on. Let's just get your contact information here. If people want to get in touch with you, what do they do? Jen Lowe.
Give me a call at 250-217-4925. Email j.lowe@dominionlending.ca or my website at jenlowe.ca.
Okay. Thanks for coming. We'll have you on again. We'll bring in a U.S. broker and hopefully we'll be able to connect with you. Okay. Take care.
Thanks so much. We'll see you later.
Hey, so just wondering what you have coming up in the market. Do you have anything interesting? Any needs and wants?
We've got, needs. I really could use a single family home under $1 million somewhere East Saanich, West Saanich, preferably with a suite or suite potential. I could use, what have we got here? Let me look at this. A West Shore home under $750. Half duplex is okay, that kind of thing. Doesn't have to be in great shape. They're willing to do some work. Got some folks coming to town, probably looking for a townhouse or single family in the West Shore. Actually, single family, probably 1.1. Newer construction preferred. Got folks looking for maybe an acreage up to 750 to 1.2, an acreage being like half an acre, quarter acre, not really an acreage, let's say, but some land, anywhere out to even Sukish area, although trying to keep them closer to town. I got a guy actually looking for some sort of future, like a holding property, and the budget's up to like, I mean, it could go up into the like 6 million range, but more like 3 or 4 million. For something that will have some future subdivision potential. It doesn't have to be imminent, it doesn't have to be turnkey, but something in the Victoria area that would make a good holding property for them to have an investment in the city.
Maybe like a sixplex or something.
Yeah, possibly. I think they were more interested in land just because of their own business and how they've got their company. They've got some. They do a lot of construction, like land, anyway, engineering and so forth. I don't want to get into details on that. Yeah, and then some more investment folks and a waterfront or great water views in Sydney area. So those are all folks I'm kind of currently looking at. I may have a condo coming up in the Saanich area. Still waiting on that one. Some other stuff.
All right, we have a house coming up with a, it did have a suite, but she took out the yucky stove. It's coming up in View Royal. So that'll be early next week. The price on that will be just under $1 million. And then we also have a listing that's going live today, and that's a 1 bedroom, 1 bath. And it's in a triplex. It's on Vancouver Street, and the price of that is $679,900. It's 699 square feet, and it has its own patio, parking, and a garden space at the back. So it's really super nice. It's like a block to Street Village. It's really, really nice. It's a renovated character home. Renovated in 10. Yeah. Okay. So anything else you want to add today?
No, I'm complete. How about you?
Okay. I'm good. I just want to remind everybody we are on every Thursday at 9:30. If you have any questions or comments or topics that you want information on, please give us a call. Andrew, how do people reach you?
I'm at 250-360-6106. You can phone or text. info@andrewplank.com is the email, and check out my website, andrewplank.com, or my Instagram, Plank Andrew. No space, no underscore.
And if people want to reach me, I'm Jane Johnston with the Briar Hill Group at Remax Camosun. My number is 250-744-0775. My email is briarhillgroup@gmail.com. Don't forget to visit us on our website at briarhillgroup.com. And we also have these videos and more at victoriarealestateshow.com, also on each of our YouTube pages. And please follow me. We have a new Briar Hill Group Instagram, as well as my personal one at realtyteacher_Remax_Victoria. All right, buddy. Take care. We'll see you later.
Thank you. All right. And thanks again to Jen Lowe for coming in.
Yeah. Thanks,
all right.
Jen.
See you, Jane.
Bye.